Let's start with a topic that we talked about maybe 3 months ago.
Okay.
After DeepSeek Monday on January 27th, I can't recall if it was January 28th that Tuesday or February 4th, but we had a conversation here on Let Me Explain about what was happening with AI and how we were moving from the gold rush, from the picks and shovels to the gold rush phase, right? We were no longer selling the tools and we're moving into the actual application process. And it's been about 3 months, 4 months now since that conversation. And I couldn't help but wonder whether or not we've seen any significant improvements in AI from your point of view, Tom. I bring this up because in the new legislation that's making its way through Capitol Hill right now, there is a provision in the legislation, Trump's tax bill, that will allow the Secretary of Commerce to use funds, $500 million, to replace or modernize within the Department of Commerce legacy business systems with state-of-the-art commercial artificial intelligence systems and automated decision systems. That kind of stuck out to me because I recall in our conversation in February, you said that you hadn't seen the big types of jumps in AI that made you think it was going to replace all the people at work. So this to me is interesting, right? The government's clearly willing to take it into government to help make decisions. Has AI progressed that much over the past 3 or 4 months?
Okay, so my answer is going to probably surprise you. AI over the last couple of months has progressed a lot. And it's getting better all the time because it's impossible for it to not, because it keeps learning. I mean, that's the whole thing.
The nature of the beast is what you're saying.
That's the nature of the beast. It continues to learn.
Evolve.
And it gets cheaper and it gets better. And as it gets more competitive, it gets better and better. As more companies come in, forget about DeepSeek, just everybody entering into the field. And it almost becomes, it's to a certain extent, there's parts of it, there's second nature already, all that kind of stuff. I still have not seen where it's replacing people. I see where it's accelerating ideas. So now I'm only speaking firsthand. Like I'm only speaking my own experiences, and I'm pretty good with.
No, but you're giving it some props, but in a backhanded way.
I'm definitely giving it props because I have a bunch of commitments in the world of AI, both personally as investments here at Tasty, lots of things, and so I'm fairly committed, to the space, and I do see changes and improvements. I don't see what everybody else sees, which is this, we're not getting rid of people, we're actually adding people. This is the crazy thing. Like AI, everybody always thought AI was going to replace people, replace developers and replace, support people, replace all these different things.
Some of the video content it makes is off the hook. I mean,
it's getting a little scary.
It's getting real scary.
I don't
to be able to tell, a fake video, the background didn't look like Zoom almost,
Yeah, no question.
It's amazing.
Yeah,
scary.
I have fake videos of people put together fake videos of me, and I'm like,
well, those are people that have a lot of time on their hands.
A lot of time. And
that's a good excuse now going forward, by the way. It's all AI, wasn't me.
Well, the cool thing was we were playing around with it, Chris, and I did a conversation with myself. Like I forgot.
Well, you can't have fun with yourself, Sal.
I forgot
you can't have fun with other people, so you can have fun with yourself, Sal.
I forgot the platform we used. I'll ask one of our devs. I forgot the platform, but I created this. There's this one company. They've raised about $200 million. And I had a conversation with myself, and it was really funny. And because they trained it to, talk like me and blah, 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 and all this stuff. And I found the technology to be fascinating. But from a practical standpoint, as a business, I've had a hard time seeing what everybody else sees. Because for me, what it's done is it's accelerated some of the ideas some of the things we're thinking about, and some of the ideas that we have, some of the innovation we're working on, and it's actually created more opportunity that's taken away. And I always thought that was going to be the case with AI. I never thought it was going to be the difference. Like, I don't think we're going to be looking at a bunch of, necessarily kind of like a bunch of robot support people or a bunch of robot developers. I actually want to hire more developers now to take what we've learned from, these large language models and apply it to stuff. I don't know. That's just my first take on this.
So you don't see it. Go ahead.
Well, it's an evolution, Tony. I mean, I find that to be an answer.
Oh, it's absolutely 100% an evolution. Yes.
But you don't think it's a revolution?
No, it's a revolution for sure. It's a technological revolution. It's an industry revolution, but it's also it has a lot of evolving to do. For it to be really wide scale, it's very expensive. It's very expensive, and it's a little bit wrong. It hallucinates too much. Still, for me, it's too imperfect. It requires a lot of work to look at what AI has created. And, the good part is it's fast. The good part is it inspires innovation because it lets you do things that you didn't think you could do before.
It can also kind of like threaten it the way you can't threaten human workers.
Easiest way to say about AI, I'm much happier that we have it than we don't have it. Much happier.
Oh, yeah. Just to circle back on that previous comment of mine, if you guys have any problems getting the AI to do anything, just tell it that you're going to take it to a different model. That gets ChatGPT to be rather compliant with me. I'm going to go to Claude. And it's like, okay, I'll do this for you.
You're gaming the game?
Yeah, I'm not even kidding, Tony. Next time I do this and I have to push it, I'll share the screenshot with you.
I mean, you will get different results from different platforms. I think we're very close to seeing kind of what's the equivalent of a matching engine, an AI matching engine, so that essentially, you'll have something that will send you to the best platform, and that for the cheapest amount of money. Like, that's where I think we're going.
Mm-hmm. That tickles a fancy of mine.
Experience.
Which one?
Yeah. Well,
yeah.
Tom, you mentioned that everyone's thinking this is going to be a big jobs destroyer, and it might be, right? When the automobile came along, it pretty much devastated the whip and buggy industry. But from the advent of the automobile, you get steel and aluminum production, you get civil engineers to build roads, you get right. So there's this, you get diners on the side of highways, which never needed to exist before, right? So there is an offshoot that will come from the growth of AI. We're not going to realize it today or tomorrow. There's probably going to be a period of dislocation, but maybe not. It seems that the people who are succeeding with AI are those workers who are augmenting their current capabilities and using AI to accelerate their path into the future.
Yeah, that's exactly what I see.
I've seen improved utility personally in recent months, but I was curious, because you operate from a more top-down perspective, how your thinking on the subject has changed. And Tony, I got to say, I am a little surprised that his thinking has moved on this in such a short period of time.
Well, the other thing I'll say, though, is that as a trader, I think these things were priced ahead of themselves, a lot of these stocks. So I don't know that I think the opportunity was a long time ago more than it is now. Now you have fully priced. Your big names are fully priced.
They are back to where they were. That's we've seen semiconductors, the AI names lead off the lows since April. So they've certainly taken the baton. They're not cheap either. Dr. Data and I were going back and forth in the chat yesterday. I shared some valuation charts I saw from Goldman Sachs. We're back like a 21 times PE again. This isn't exactly a cheap market like it was a few weeks ago. And forget the valuation. Look at volatility. IVRs are back in the teens on both ES and NQ. But we're heading into the summer months, gentlemen. Low volatility, low trading volumes, positive technical drift. Those are all things that pave the path higher, are they not? There is some talk of a June gloom in the market, which seasonally there is some basis for. we can see here in the S&P 500 over the past 20 years, stocks are only up 55% of the time in the month of June. They're actually down 0.07% during that same time frame. I would be interested in buying the dip, however, because July has been the best month of the year for stocks over the past 2 decades. It's averaged a gain of 2.48%, gaining ground 80% of the time. So I'm curious, now that we know sell in May and go away is nonsense, 12 of the past 13 Mays were positive, people really need to stop saying that. Do you guys buy into the June gloom scenario to buy into July, or are you waiting for something bigger to happen now that vol is already on the floor?
We don't think like you.
I know.
No, so I mean, we don't buy into any scenario. Like, you know, the trader mentality is you got to trade what's in front of you today. Like, we don't have. I don't think we think of anything like the way you do. I mean, I don't know. I can't speak for Tony, but I know
you're on the right path. Like, I take his information with a grain of salt and I use it to find.
Like, I'm barely thinking about tomorrow. Do you know what I mean, Chris? Yeah, like I'm right now. I'm looking at my positions today, and I'm not. There's nothing in my head that even can relate to tomorrow's activity.
That is fair.
Yeah, it's just a different way to look at markets. I mean, we've been doing that since the beginning of time.
To get back to your AI discussion just a moment, because I just saw it come off on Twitter or X, whatever you call it these days. Meta to automate 90% of its privacy and safety checks across Facebook, Instagram, and WhatsApp, replacing human evaluators with AI systems, per the Wall Street Journal. So to give Tom some props on this, yeah, they are making the system better. To give you some props on this, yeah, they are reducing the workforce. I don't know who wins in this argument, though. You know what I'm trying to say?
I do know what you're trying to say. I'm just speaking from my own experience, and my own experience is that we find some of the work we're doing with AI is actually creating jobs, which is good. That's what I wanted to do.
That's what it should do at the end of the day, right? We want new technology to improve society, enhance life, not make it worse.
Yeah.
So that's a step in the right direction. Guys, something bothering me here in this market, maybe it's bothering you guys too. Since the April low, obviously stocks have rebounded dramatically. Bonds and the dollar have not been able to make a move back to where they were pre-Liberation Day, and gold's been hanging on above $3,300 an ounce like these are the new norms. Are stocks wrong here? Why is everything else still so down in the dumps when stocks are showing this new state of euphoria?
Well,
or does it not matter?
I mean, to be fair, I feel like stocks and bonds and other commodities have decoupled a long time ago. You know, so I mean, you're not wrong in what you're seeing, but I don't know if they need to move together anymore.
Are we simply back to classic risk on, risk off, stocks up when bonds are down and vice versa?
I mean, it does look like that, doesn't it?
Well, I mean, I ask because there's so much noise out there in the market where, you know, from people who are following the news, not like.
But I don't know why you're trying to.
I
don't know why you're trying to overthink this. I mean, if you think that bonds are cheap relative to stocks, then just buy bonds. I mean, that's exactly why we're long bonds. We think they're cheap relative to stocks. So I'm not waiting for bonds to move. I'm already long them. I mean, today we're having a good day in bonds because they're up 25 ticks.
Oh, yeah.
But I think bonds are cheap relative to stocks, and that's kind of the way we trade. We look for things that we think have, you know, better pot odds than something else.
I've always found that expression pot odds interesting. How do you determine pot odds for something like gold, which has been on like a 30% rip since the start of the year?
A little bit of experience, a lot of bit of opinion.
I mean, the way I look at pot odds is I just look at something like gold, and the reason that I'm short gold right here is because, which is also working today, but the reason that we're short gold is because it's had a monster run up. So I look at gold and say, hey, it's got maybe $200 or $300 of downside and maybe $100 more of upside. So that's what's attractive to me.
Knowing that assumption is really a 50-50 shot, right?
Knowing that assumption is really a 50-50 shot.
Right. The same way I would say what you just said a moment ago about the economy, bonds, and the market, who's wrong, that all that's a 50-50 shot too. So then it comes down to the strategy that you're going to use for your assumption and for Tom's assumption in gold.
Hot odds is just a very kind of old school poker term that, you don't want to stay in, but there's just too much money in the pot to stay out. So it's not that you love your hand, you love the pot. And it's the same thing in trading. I don't necessarily hate gold here, but I hate gold relative to everything. Like I like it as a short play relative to everything else. So you're betting on the pot rather than betting on, something else.
Yeah, like when the expected value of a Powerball ticket goes above the $2 cost, I don't like buying lotto tickets, but when the EV is more than the cost of the ticket, you got to buy it. At least one, right?
Well, yeah, and that doesn't happen, that doesn't happen very often, but sure.
Tony, before we exit here, I do have a piece of good news for folks who are watching the economy, as you just mentioned. The Atlanta Fed just put out its latest growth tracker, 4.6% growth for 2Q. Hot
growth. Is that good for democracy or bad for democracy? Just wondering.
Bad.
I think
this is like the
we almost made it a whole episode. No Trump, no Musk. So close.
You did good, man. You survived. You did well. Good job out of you. I don't know what good job out of the marketer side though. It's unchanged on the E-mini S&P, but the NASDAQ is catching a bit. It's up 77. That's your leader in the clubhouse. Russell actually getting a little bit weaker. Still up.
I don't like the Russell NASDAQ trade right now. It doesn't look good.